Hey folks, so today I'm going to be reviewing the IPO of Lyrean Rail. They just IPO'd last week, and there are some auctions already for um, some of their shares. And this is the first time we actually get to see any hard financials about the company. Oh, just echoing. Let's go ahead and get it pulled up and take a look and see what kind of investment prospect they offer. So, okay. Yeah, let's go ahead and snap this a bit better. Or okay, hopefully folks can see that well enough. It's not a very sharp image, but uh, so they show the last few months of revenue here. So there's September, October, November, and December. So the quarter would have been October to December for Q4 2024. So we see there was a huge uptick between September and October. Be curious to know what the cause was, because even though it did decline a bit, it's still well above what it was in September. So if we look here at this description of the revenue breakdown, most of it is in coppering. There's shop sales. There are surveys, and then there's other, which is this very small amount right here. Here they say it has been a formative beginning for Lyrean Rail. Despite our leadership changing hands multiple times, we've managed to undertake rail surveys of 85% of the tunnels terminating at Pavia International Station. These surveys allow us to categorize rail tunnels and analyze commuter use, determining which rail connections would benefit from coppering and further maintenance. We've been paid to undertake surveys by the Pavian government and receive funds from both our domestic government and international governments to complete rail coppering duties, which make up a bulk of our revenue. So that's actually, I think, a nice detail to see there, because when you look at actual companies, usually a reassuring sign is if a government is a major customer of theirs. So if we think about the company Palantir, that is the data analysis company that was founded by Peter Thiel and some of his closely associated venture capitalists. They really got their start on having contracts with governments, because those usually typically have good access to just to the wealth they would need to fund public expenditures like that. And they're not going to be too worried about cost cutting. They're going to be more concerned about, obviously they don't want to overspend on things in public budgets, but achieving strategic goals is really more their focus with things like that. So many of the uses from government contracts with Palantir's product, for example, has been military defense. So a good example is using the data analytics of Palantir's technology. The military has been able to track the location of mortar shells by sort of tracking the location and timing of a mortar strike. They're able to sort of pinpoint it and determine probabilistically what the origin point would be based on like the parabolic movement of mortars. And this has a very high effectiveness rate. And basically, in the wars in Iraq and Afghanistan, for example, any insurgents engaging in a mortar strike, say from the back of a pickup, could only launch a few shells before they had to start moving, because the ability to track would have allowed the U.S. or any coalition forces to dispatch a quick reaction force with helicopters that could just fly up to them and take them out. So when they can't do a sustained mortar strike, that of course helps long-term operations in the theater. This is not something that you can put into a profit model for like a commercial customer. So if Lyrean Rail was depending on commercial customers to earn something, it would maybe be a bit riskier. But in terms of thinking about the risk management of this investment, then I think the fact that it's strongly supported by governments, and not just Pavia's but other ones, is a good sign. So I wanted to make that observation real quick. So let's take a look here at what else. Additionally, Lyrean Rail set up a decoration shop selling interior housing and commercial products. This shop is self-ran, with profits going towards the funding acquisition of copper. Going forward, we will utilize our vast copper reserves to undertake government contracts and provide further benefit to our shareholders. We made a promise when we first launched on the Pavia Stock Exchange system that we would pay our shareholders dividends made up from our profits. We will remain committed to this promise. As such, our dividend for Q4 2024 will be 1.18 diamonds per share held as of January 15th, 2024. We will continue to pay a dividend once a quarter based on our profits with an aim to go monthly. The dividend is calculated by taking our profit and dividing it by the number of publicly held shares, which is currently 500. However, for the shareholders' benefit, Monument Group are foregoing their dividend on their stake of 285 shares. This is an interesting situation where Monument Group is choosing not to receive a dividend. So I don't think there's a real life example where voluntary dividends are a thing. But given the close-knit nature of a lot of these things in Pavia and in Civ, I don't think that's too surprising. Let me take a look actually at the auctions for Lyrean Rail shares. Okay, so I'm going to look at, how long does this one go? I'm looking at the one posted by Steelhand. It's looks like it's Ansgard's shares, and buyout is 100 per share. Goes on for until 17th. So this would have already ended. So this basically gives us an idea of the closing price. Let me see here. 60.62. Brass bid 76. It got up to 78. So brass bid it up to 78 just before they could close. And then Sepsis lost all their money to Dice, so they could no longer bid, and then the auction was closed. So brass bid 77 per share. So if we think about that from a valuation point of view, especially using the dividends as a basis, so let's see, 77 per share. If they're currently guiding for 1.18 dividends divided by 3, that's about 39.3 diamonds per month divided by 78. That's a yield of, that's a very small yield. So not clear to me that it was ideal, just because right now the monthly yield, unless Brass has a lot of cash, but even so, like the yield on cash in a Monument Group account would be higher than that dividend rate. So it possibly overpaid. I think if we look at that that yield, let's say that someone had paid just 30 for it. If they paid 30 per share, that would have worked out to a monthly yield of about 1.3%. So that's close to what the Monument Group interest rate is on a monthly basis. And I think if you're gonna overpay for a share of Lyrean Rail, you have to believe that the dividend will be increased, and that profits will reflect that. So if we think about what net profits were for Q4, and the fact that Monument Group forfeited their shares, I'm going to do some quick math here. Okay, so we had net profit is 254. Okay, 254 divided by 500. So that would be earnings per share of about half a diamond. So if we take into account the fact that Monument Group is forfeiting most of those, so 500 minus 285, It's 215. So 254 divided by 215, that gets the 1.18 times. So basically, for this dividend to be sustainable, Monument Group not only has to continue forfeiting their dividends, but the earnings of the business will need to grow. And at this point, it's just not clear. While we can assume probably a similar level of cash flow, anywhere from maybe 200 to 250 net profit per quarter is possible. It's not clear to me what the huge source of growth would be, because a lot of rails are already built out and developed, and there's a lot more room, I think, for just maybe a tighter quarter, and therefore lower earnings and lower dividends. And for the dividend to see not only an increase, but one that sufficiently beats the yield that you get from a Monument Group account, there would need to be something to help double, triple, probably quadruple the earnings of the business. And it's that sounds like it would have to be something that occurs on a very large scale. So I have doubts that 78 was the right price to pay, but it was a good price for Ansgard. So yeah, I think anything getting into the 30s seemed a bit suspicious. Big Shadow coming in bidding 60 was just because it's on the 14th, which is when it started. Within the first couple of hours, it got bid up to 7 diamonds per share for the lot, and then Big Shadow just came in and immediately bumped it up to 60. That to me, specific language immediately replied, the real question is whether this company is truly worth 60 diamonds per share. And then Warren Drop replied, we know it's at least worth 30. Ansgard even agreed. I'm looking at this now with specific language about whether it's worth $60 per share. He said it fucking isn't. The person selling the shares even agreed it's not worth that much, and it got bid up to 78. That, I gotta say, is something else. Wow. Okay. Well, let's continue to look at some of this. Okay, so I suspect there's some seasonality or cyclicality where there could be some revenue spikes when more projects are adopted, depending on when treaties are signed and such. But overall, it seems to me like the cash flows for this business are tight. It'd be interesting to have maybe a more thorough breakdown of the financials of the company, but I do think with this brief one-page brochure almost that you get the exact amount right in a bare minimum to understand what the value would be. At the very least, one thing I can do is I could propose evaluation. So okay, so I've got something to suggest how we could value it using a discounted cash flow model. I'm going to go ahead and share this tab. So this is the same calculator I used last time. So we'll use the dividend as the free cash flow. Let's assume they can manage to grow at around 3% per period. And again, instead of years, we'll do quarters. So this is basically valuing the business for the long term over about 2.5 years. Because again, I think it's better to think of a quarter as the analog to a year in Civ, and then it's rounding it up to 2. But this is 1.5% as the discount rate, essentially comparing it to the Monument Group interest. And then I'm giving it a very low terminal multiple because I just don't imagine that the future cash flows would be as much. But again, the cash that would be generated in this time discounted would be worth about 1280, and then the future cash flows beyond 2.5 years, if we want to value those, are worth about 683, giving us an intrinsic value of about 1964. So 30 is essentially maybe assuming better growth, I would say. So if you assume it can grow, let's say 5%, it gets over 20, I think you have to assume that it can have compound growth of 10% like the dividend on over the next 2.5 years for it to be worth over 30. This is probably the most optimistic case for the business. And just I have a hard time seeing what that would be, what would provoke a flurry of new building projects. I think one thing that helps is that as more rails get built, the net of coppered rails that need to be cleaned, for which Lyrean Rail would earn money, is bigger, and so there's more of that recurring revenue source. But that's not going to be as much money as the actual rail construction itself. So there's definitely a point where the rails shift from being this new opportunity to sort of just like almost like a fixed income investment, and there's going to be very limited upside on what it can produce, unless something caused Lyrean Rail to be able to price its, cleaning the copper part, allowed them to price that better so that they can grow those earnings over time, to the point that they would still be able to collect payment on it, and governments just wouldn't do it themselves. So that's just the thing to wonder there. But it's not something like I can imagine Monument Group being able to spawn off new services, new business lines that generate more earnings, and then of course continue to grow their accounts as Civ grows. So there are those things. Monument Group is in a much better position. I mean, they acquired Pearl Protection Insurance Group. So that's just an example of ways they can enhance their business. When I think about artificial industries, a stone is such a regularly needed thing. That seems like to me to be a better source of enduring cash flow. Tusk, the input costs on the map art make it much clearer that the cash flow is sustainable. So there's a lot more going on to make me think like those types of businesses have the right ingredients. I think, personally, if I were going to buy Lyrean Rail and having looked at this, I probably would have gotten in at like $10 per share. But yeah, I think that basically covers it. Oh, thank you, Jim Monkey. Yeah, and actually, Jim Monkey chatted with me a couple days ago and expressed some skepticism about the value of Lyrean Rail, because he looked at it and he said, it only makes about 250 diamonds per quarter, not exactly a big company, and he's right. So I think the case needs to be made by the management of the company that there's a lot of value here for prices like what Ansgard sold for to count. But yeah, I think you got a good deal selling it. It does sort of show how the auction process can cause things to be bid up. Maybe better valuations will appear in the Podbean exchanges if the auction process isn't moved, and instead a bid-ask model is done where the transactions execute almost instantaneously and aren't allowed to sit for a week. I think the auction process is one that really favors the seller, because the price can only be bid up, and in actual stock market transactions, there's a bid-ask spread. So the bid is the orders that the buyers want to put in, and then the ask is the orders that the sellers want to put in, and the sellers can basically sort of put in a lower and lower amount, which is they kind of bid it down, which is what the seller would do. Buyers bid up, sellers bid down. There's only a mechanism to bid up. There's no mechanism to bid down. And so I think that's part of what goes on here. So it's great for an IPO, I think, especially if the business is trying to raise more capital. And I think folks should be mindful of that going forward. I wouldn't say Lyrean Rail is the only time I've thought that, or it's been clear to me, but it's definitely the first time I've seen a valuation get into the area where it seems to be clearly overvalued to me. So I hope it works out for Brass, but it doesn't seem likely based on the fundamentals. With that having been said, I think that more or less confirms it. And I don't have anything else I would need to say in the review here. So for anyone who did watch, thanks for checking in.